Hey everybody, I'm at Prime Lending again today with my friend Tom Hart here. Tom is the production
Everybody.
manager of his team at Prime Lending, and he's been in the business for over 17 years. So today we're going to talk quickly about some common misconceptions that a lot of buyers come to me with and a lot of borrowers come to Tom with. So we're going to run through these pretty quickly, but as always, if you have more questions or any specific questions, please reach out to either one of us. Okay, so Tom, I heard that I need to have 20% down in order to get a loan and buy a house.
No, I mean that's definitely obviously a misconception. So there's programs you can qualify for with financing 100%, right? So I think the misconception stems from back when the previous generations were purchasing homes and they you needed 20% down to avoid the PMI, to avoid certain other costs that they would take on, and at one point in time it was harder to finance a house than it really opened up. Many years ago to now. But if you talk to somebody who's purchased a house back in the 80s or the 70s, at that time, pretty much everyone, if you didn't have 20% down, you weren't buying a house. But
Okay.
nowadays, there's so many different ways we can help out with your cash to close as well. Grant programs, down payment assistance programs that we can get you kind of a larger down payment than even what you have. But it's definitely a massive misconception that we still hear every day, years
Okay.
later. Yeah.
Oh, that's good to know. What about this one? I heard I need to be at my current job for at least 2 years to qualify.
Nope, another misconception, right? So you could literally come fresh out of college and you're in a trade to say be a dentist, and you start a job 30 days after you get out of school. We would just take your college transcripts for the last at least covering 2 years, and then align that with your current pay stub and show what your pay is. So no, you don't. We do require a 2-year job or schooling history, but it doesn't need to be at the same job. And you could actually change jobs during the process. We just ask that you let us know that you're doing so
Yeah.
before you make the change, so that when we get to the end of the process, we're not trying to verify your income. We know that there's a change. We're giving you the list of the documents we need for that, and then we're able to seamlessly help you out with that transition.
Okay, awesome. Now, what about credit? So I heard that I have to have a perfect credit score or at least, 740, 720 in order to qualify. Is that true?
Yeah, I mean, obviously, in an ideal scenario, you've got the perfect credit scores, right? So, I mean, we all strive for the best possible financing available. But no, we have programs that go down to as low as a 580. But even if you're at a 580 credit score or even middle to average credit, which average credit's right around a 680, we've got tools in place, the credit expert tools that can show you, okay, what if I paid this card down? How would that impact my scores? What if I were to, close out of an account, or what if I were to, pay off a collection, or whatever the case may be? We run everything through so that we can try to get you to the best possible scores. So some people have lower 600 credit scores when really they just carry a balance on their credit cards that they could afford to pay off but never think to do so. So we'll walk through the credit expert tool, tell you exactly what to do, get updated statements for those accounts, send them to the bureaus, and all within typically a few business days, we've got an updated score that hopefully is as close to that 740 as possible. But
Wow.
some programs actually, it doesn't really matter so much what your score is. It could be a 580 or it could be a 780. The difference in financing or interest rate is very, very nominal. So we explore all those and kind of cover each of it, because obviously it's a case-by-case basis. But
Okay.
no, definitely don't need it.
So
But
it sounds like before I go paying off certain things that I think I need to, check in with you first, run it through your credit system to kind of guide a buyer in the right possible direction, because you could think I need to pay off all my credit cards, or on
yeah.
the other side of the coin, it doesn't really matter, but it does matter.
Well, that happens all the time, actually. So sometimes people rip off their nose to spite their face. So they'll take their money that they have available to purchase a house and start paying down the credit cards. Well, that's great, and it probably will have some form of a positive impact on you. But the reality is that now you're drained and you don't have the money you need to purchase the house. So you might have qualified for one program that requires a little bit more down, but now you don't, because you don't have that money anymore.
Yep.
And in some cases, people think, well, if I pay my credit card down, then that's going to help my score, because really the credit to limit ratio is a factor that does impact your credit. But in some cases, instead of paying a card down, you can call the credit department and have your credit card limit increased. So if you have a limit of 5,000, your balance is 4,000, you want to keep that credit to limit ratio at 40% or below, you call and say, hey, I paid you perfectly. Can I get an increase to 10,000? So now your ratio
Yep.
change and it costs you nothing. So
Yeah.
I always encourage people to let me take a look at the credit before doing anything.
Yes.
And then I'll run it through the credit expert tool. We're going to put you in the best possible situation. So
That's
just
great.
kind of trust in our process when it comes to that
Yeah,
for sure.
that's great. Good stuff. Okay, what about shopping around for rates? So this is another thing I hear all the time. I'm sure you do as well. Buyers want to know, if I refer to a certain lender or a certain bank, they want to know if they should be shopping around at lots of different banks, maybe the bank that they do their personal banking with, to get the best possible rate. And if they do that, is that going to damage their credit?
Right. So I always encourage people, this is going to be one of, if not the biggest financial decision you're ever going to make. Right. So I would never discourage anyone from going to shop around for rates. But I'd encourage you to do that at the earlier start of the process. Okay. Because if we're working together for several months and the customer service seems like it's at a good level, and then you go into contract and then you think, okay, well, now I should shop around. You don't know who you're dealing with. If you're dealing with a centralized bank that has some kids working there that are answering the phones that have really not much knowledge. Even if they have somehow lower rates because they pay nothing in commission earnings, the problem is that they won't put you in necessarily the best products or programs, right? Mm-hmm. So you want to make sure that if you're comparing lenders, compare comparable lenders. Mm-hmm. Make sure it's a reputable lender, make sure it's a reputable loan officer, somebody that does a good job, right? Yeah. So look them up, look up the reviews, look up my reviews. I encourage you to do that as well. But as far as for the credit pull, mm-hmm. you don't need to let people pull your credit. So if I pull your credit and you're at a 720, when you're calling these other lenders, and again, I'd recommend doing it at the start of the process so that you're not doing it at the end, because your offer gets accepted with an approval letter from us versus somebody else that might have had an impact. Mm-hmm. But I encourage you to tell them what your score is, mm-hmm. give them your scenario, and let them run numbers for you that way. There's no reason to have your credit habitually pulled. Wow. Now, if you do have your credit pulled within the first couple of weeks, it is considered a piggyback. So another lender could pull your credit, and they basically, the only hit you took was from when I pulled credit. Got it. So, and your scores may be different, but that's because creditors possibly have reported in the meantime. Yeah. So no, I wouldn't discourage you from doing that. I want to make sure you make a sound and educated decision. We do offer some tools when it comes to interest rates that other lenders typically don't. Yeah. We have a free float down, so when you go into contract, if interest rates go lower within a few weeks prior to closing, we offer you the lower rate at no cost. So you don't pay anything there. We're also offering no lender fee refinances for after you close. So the right now interest rates are slightly higher. They've come down a little bit, but they're slightly higher than where they were, just not slightly higher. They're a few points in most cases higher than where they were a few months, about a year or so ago now. Mm-hmm. So if interest rates do go down as they're expected to do, then you get to a point where if it's advantageous to refinance, we're not charging you any lender fees. We're getting discounted title costs, things of that nature. So it won't cost you that much to refinance. So right now, this is going to be hopefully a temporary payment for you. And then eventually when the rates come down, we get you that permanent one. Yeah, and I want to do a whole video on that refinancing because there's a lot of information around that too. For sure. All right, and lastly, I want to know the difference between a pre-qualification and a pre-approval, if they're the same, and if one is better than the other, which one should I go for? Right. So that's a massive misconception for sure. So you could deal with two different banks and do the exact same thing. You could provide your name, date of birth, Social Security, enough to pull your income, credit, and asset information. They could put it through the system, run it, and get an approval, and you can get the same exact. You can get completely different letters for the same exact approval type, right? Mm-hmm. So first misconception is that a pre-qual or a pre-approval are in any way different, but they are different and they are the same, right? So one lender that's typically smaller may issue a pre-approval letter when they just have your initial information, and I may have all of your documentation, may have done a completely run through everything, and your letter says pre-qualification. That's largely because we're a larger lender. And the government came down on a lot of us lenders many, many years ago and said, unless your file goes to underwriting, you should not be calling this letter a pre-approval. So most of us, that are a little bit larger, changed our initial approval letter to pre-qualification. Okay. Now we have a mortgage approval process for to be determined people. So we can take your file, take your documents, and submit it to underwriting for an actual mortgage approval. Mm-hmm. And with that, right now, we're offering a close on time guarantee. So if we do submit your file to underwriting, we do have an approval for you. When we submit your offer, you'll have a mortgage approval showing that underwriting completely reviewed the file, and you'll have a close on time guarantee for the seller. So if we don't close on time for any reason of ours, then the seller gets $5,000. Yeah. So awesome. It's a really cool tool, and so I do encourage you to send the documents in and go for a full-on mortgage approval. keep in mind that, documents expire, so don't get frustrated if you have to continue to update it throughout the process.
Yeah.
But we're kind of doing that towards the offer stage of it
Mm-hmm.
and submit it to underwriting because our underwriting turn times are really quick right now. So,
Okay.
but no, that's kind of the difference. So you might have one that says pre-approval, one that says pre-qualification, and they're exactly the same letter, but somebody didn't feel the need to change their title of it.
Okay. Awesome. Thank you.
Yep.
Well, I think that about wraps up my questions. So again, if anyone has any further questions, please don't hesitate to reach out. Bye.
Thanks, guys. Wow, that